tired of buying late and selling too early? In just 5 minutes, probably a little bit longer, I'm going to show you how to spot key levels using Tradingview, so you can time your trades like a pro. No complicated tools, just simple price action. Let's jump in. I'm using Bitcoin on the daily chart here, so you can see how this works in real time. All right, it's completely unmarked. First, support and resistance. Support is where price bounces. Resistance is where price gets rejected. Now let's mark a clear resistance zone. Let's use this area, and we'll also use this area here as well. Okay. Recently, this is a Bitcoin chart, just recent history, right? This is the May time, and this was December 2024. So over here to the far left, we're going to click on this right here, and you can click here. The different trend lines, raise, horizontal line. We're just going to use a trend line. Okay, so we're going to use that. Click here, and I bring it over for resistance here. I click, it opens this up, and then where I want to stop it, I click again. Boom, there it is. Okay, and as you can see here, there's a few touches, quite a few touches. Right, the more touches, the better. The more important the line is. Okay, this right here was strong resistance. Okay, because it went from May 22nd to July 2nd. Quite a bit of time and more, really. It just got off recently, July 8th. Let's continue. Now let's find support. All right, down here, there's support. We'll do the same thing. We have to click it again. I'm gonna change it. Okay, this is how some people do it. I don't like to do it that way. How I like to draw it personally, and again, it's preference. This is not an exact science. Okay, but I have found better results if I come up here, right up here on the top left again. See at the top is this. This is where we are with candles, right? So we can change that to line. Go down here. To me, it's a little better. It gets rid of more of the noise. Although I did a pretty good job of eyeing it, the two touches, but it could be more precise if I use this tool. I mean, if I use the line as opposed to the other one. We're talking just a tiny bit, but I mean, like many things, it's a game of inches. In this case, less than inches, centimeters, or whatever you want to call it, okay? Whatever unit that's smaller than centimeters. All right, so there we go. So as you can see, we'll put it back now to candles. There we go. Let's do it over here. But this time, let's do it over here with the line. Okay, so what can we see here? First, let's do support. You can see right here. Again, the more touches, the better, right? So I would say this support and resistance. I would say this, because right here is just two touches. But if I just bring it down a little bit, now we're looking at 3 touches. Okay, boom. All right, so that's how I would see it. Support, resistance. And you can tell, again, just the number of touches, how important it is. Look at the support, very, very strong support. But lo and behold, look, it dropped, it lost it. Just because you have these lines up doesn't mean it has to follow it. We're playing percentages here. We're not playing in 100%. Nothing is 100% in technical analysis. But the more things that tell you one thing, right? The more things that say this direction, or it's telling me this, all these things are pointing to it, the higher the probabilities are that's how in fact it will be, right? I'm going to mention again, the more times level is tested, the more important it becomes. Clearly see here, okay? These are the areas where smart traders make moves. Now let's add RSI, because again, we want as many things telling us the same thing, right? We want confluence. The word is confluence is what I'm looking for. We go up here again, indicators, and you type in RSI. RSI stands for relative strength index. Okay, you could put RSI, or you could put relative strength index. Right there it is. I already have it. I use this one as a tool, the RSI. So we're going to put that. We're going to click on there, and it would pop up right here. Boom. There it is. There's the RSI. Over here is the number that you can read. Right here, where it's currently at. Right now, it's currently at 63.92, down from yesterday, where it was at 70, 79, 78. 77. Overbought. Above 70 or above, overbought. 30 or below, oversold. Okay, so when it's overbought, you can expect it to drop. Not always. When it's down here, 30 below, oversold, you can expect it to bounce. Not always. Okay, keep all that stuff in mind, and then you just look for confluence, right? We'll go down here. Well, actually, we'll start right here, right? Right here, this thing was at 35, 30. It moved up, started moving up, right? And then right here, it started forming a base. As you can see, for quite a few days, it started forming an area of support. Right here, it was oversold. Here's one example where it's showing oversold, but what happened? It moved up. It moved up here to area of resistance. So it continued to stay up there. Again, that's an example of not always, right? So it stayed oversold for quite a bit of time, right here, it went pretty high, it went up to 80, right? And from there, it started dropping. Okay, so it cooled off. It dropped quite a bit, according to the RSI, to 42, which coincides with right here, this area of resistance where it held, right? And then from here, it bounced. So here it was approaching oversold in the 40s, right? And what did it do? It bounced, went up here, right here. It didn't go up to 70, but it was at 63 at an area of resistance. And what happened? It respected that area of resistance, came back down. Right here, the RSI was in the 30s again, right? Probably oversold. It bounced, came up. Notice how it's in resistance. It's not in 70 at this area right here. It's in the 50s. Broke through. Now this area of resistance has become support, and it moved up. When it moved up here yesterday, on the 14th of July, as of the time I'm making this video, that yesterday, it went this high. It wick. You can see the wick. I don't have an area of support right here because this is an all-time high. But according to the RSI, it is oversold. It was at 70. It was almost near 80, 75, 76. What happens? It cools off. There are other reasons. Okay, again, this is not stand all be all. You have to look at other indicators. You have to look at other data points. For example, here, and this is outside of the scope of this video, but here, one of the reasons why it dropped back down is market makers wanted to liquidate these areas down here, and there's really not much above to liquidate. So what do? They basically dropped the price. They did what they could to drop the price. All right, so there we go. And I'm going way over the time that I wanted to. I apologize for that. But there's a lot to it. But this is the simple part, and this should help at least learn areas of support, areas of resistance, how to spot them, how to put them, how to spot them, right, with the eye, and then putting the lines here, right here, put the line right there, here, click, put the line right here, as we saw, boom. Add an indicator. The RSI is a good one, all right, over 70, overbought, under 30, oversold. RSI works best when combined with support and resistance. It's an extra signal, not a standalone indicator. Nothing is standalone, guys. You have to look for confluence. You have to look at other things telling you the same thing. Okay, but that's another video. So here's how you put it together. If BTC is bouncing at support and RSI is rising from oversold, it's a high probability long setup. But if price breaks support and RSI is dropping, it's a sign to stay out or look for the next support. Save this video and send it to that friend who always buys the top. Drop your chart questions in the comments and I'll pick a few to review in the next video. And if you want a full TradingView deep dive, just let me know. See you in the next one. Peace.